What's up, investors? This is Austin Lieberman with Founders 5. This is going to be a almost daily show where I'm going to bring you, in my opinion, the only news that matters for people like me that are long-term investors looking to grow long-term wealth. And specifically, I'm focused on what I believe are the world's best founder-led companies. These are companies that are still run and invested in by the founders or the people that created their companies. This isn't going to be covering all the news or the scary headlines. This is going to be covering the few things that matter on an almost daily basis. If you're interested in this content and you're listening to it on a podcast or on YouTube, the basis of all of this, all of the charts, the numbers, everything we cover is going to be included in my free email newsletter, austin.substack.com. So you can look at that as a way to almost double down or upgrade your experience where you can hear it or watch it wherever you're watching, and then subscribe to the email list and see all the stuff and read it and review it again. Or just listen on your favorite podcast player or YouTube. If that's what you're doing, please subscribe, leave a review, like the video, and help the world find us and help us teach more people about this awesome thing, which is investing. So let's get started today. Today we're talking about Microsoft and Atlassian earnings. Not invested in either of these companies, but they both give us a great indication of the presence of the cloud, how cloud computing is doing, and which is going to be a good indicator for how the companies I own, which are mostly software and cloud based, are probably going to report earnings over the next few weeks. So that's what I'm paying attention to. There's a link in the email newsletter to Atlassian's second quarter fiscal year 2020 earnings report. You can come in, click that, and check it out. But I'm going to cover the big numbers right here. Revenue, their total revenue was up 37% year over year, which is great. That was better than expectations, and the company is growing sales strongly. The specific segment of their revenue that me as a cloud investor, and I think if I were invested in Atlassian, I would be most interested in is their subscription revenue. Subscription revenue is great because these are contracts that it's really easy to renew. Once people start subscriptions, they're less likely to cancel them. And their cloud revenue is included in their subscription revenue. That was up 50% year over year. And if we take a look at Atlassian's subscription revenue over time, we're looking at a chart now where in the first quarter of 2019, their subscription revenue was growing at 55%. And now we're in the second quarter of 2020, subscription revenue is growing at 50%. So that's great. It has dropped about, the growth has dropped about 5% over a little over a year, but that's okay because this revenue is becoming a larger and larger number. So it's harder, law of large numbers, it's harder to continue growing at 55%. So the fact that they're still at 50% is great because that number is getting bigger and bigger and it's tougher to keep up with. The other thing is, and this is Atlassian specific, but wow, was their net income impressive. So this earnings report, they reported net income of $124.1 million. That is an improvement from the same quarter last year, which was $45.2 million. So we're talking about, I'm not great at math in public, but we're talking about 3 times more net income in a year period. That's pretty great. And what that means is that they're able to grow revenue fast while becoming more profitable, which is really, really important for the long-term fate or growth of the company. Their balance sheet looks good. They've got $1.9 billion in cash, so they're doing great there. Their free cash flow is improving. They've got plenty of free cash flow. And that's really all I'm going to talk about with Atlassian. So strong report, a good indication that the cloud sector is doing well. And it makes me excited to think about what our companies are going to report over the next few weeks. Last thing we'll focus on is Microsoft. I care about Microsoft for the same reasons. They are one of the big 3 players when we think about cloud platforms that all of these businesses, small businesses, large businesses, are building their businesses off of and building applications off of and storage and running different things of their business. That makes all of that easy and possible and secure. The other 2 big providers are Amazon with Amazon Web Services and Google Cloud or Google with Google Cloud Platform. So Microsoft is one of the big three there. Their cloud offering is called Azure. That's the only part of their earnings report I'm going to read. Their earnings report overall was strong, but specifically their intelligent cloud, their server products and cloud services revenue grew by 30%, which is great, driven by Azure revenue growth of 62%. Very, very strong, 62% revenue growth off a huge base. And what that tells me, if they're reporting good, AWS is reporting strong numbers, Google Cloud is reporting strong numbers. They have so much revenue that all of these little companies compared to Microsoft, which is around $1 trillion, I'm invested in companies that are around a 10 billion market cap. So literally 1/100th of the size, I think, if I got that math right, that there is plenty of room. There's plenty of spend and room for my smaller companies to grow because businesses are spending. The last reason I care about Microsoft, other than it drives a good portion of our economy with all the jobs and innovation stuff, is Microsoft Teams compared to Slack. I am invested in Slack. I own shares of Slack, and Microsoft Teams is basically a chat and collaboration app that competes with Slack, which is a chat and collaboration and workflow application. There's a lot of talk out there that Teams is going to crush Slack, and so Slack has sold off a lot. I don't see that in the numbers. What I do see is that Teams has grown pretty good. They're not sharing specific engagement numbers. So although their monthly active users and daily active users are growing, right now they've got 20 million daily active users, but they have 200 million Office 365 users. So it's only 10% of all of their Office 365 users are using Teams. What that tells me, Teams comes free with Office 365. So I'm not that impressed with the rollout, and I'm certainly not at a point where I'm scared that it's going to kick Slack out of the market. What I think is more likely to happen, Teams does well, Slack continues to do well, but Slack becomes the best company in the world, which I think they are, at this broader chat application and workforce collaboration thing, because that's all they do. That's all they care about. They came public. They're pioneering the way. And this report makes me feel good about Slack's report coming up. We'll see if Slack's numbers suffer and it appears that they're losing steam or losing momentum to Microsoft, then I'll reassess. Only other comment I'm going to cover is what Satya Nadella, Microsoft's chief executive officer, actually said about this entire industry last earnings. So this was in first quarter 2020. He said, we are broadening our opportunity with 2 billion first-line workers worldwide, adding priority notifications, role-specific targeted messages, and the ability to clock in and out of a shift. So that's a couple use cases, but the big number there is 2 billion first-line workers. That just gives you an idea of how many potential customers and users there are for these types of apps, which means that there's room for Microsoft Teams to win. There's room for Slack to win. So there could be multiple winners in this market. That's all I've got for you today. Again, I would love it if you find me in the email newsletter, austin.substack.com. It'll be linked wherever you're consuming this, and then subscribe, like the podcast, like the YouTube video, and help people find us. And tune in next time. See you.